Last week, the US stock market was trading sideways. Tech stocks moved higher, with NASDAQ gaining 0.7%, but the broader market index S&P 500 slipped into the red by 0.1%. S&P 500 futures showed almost a zero upside movement. The sluggish market activity after a first quarter rally, as well as the latest data on unemployment in the US, indicate that the upward movement continues, but at a much slower pace. After a rapid rise in the previous week, global oil benchmarks edged lower on Monday. Thus, Brent declined by 0.4%, while WTI lost 0.5%. Oil is losing ground amid worries over a new coronavirus wave in Europe. This creates uncertainty in the market. Today, Brent crude is trading at $64.20 per barrel. It is expected to stay in the range of 62 to 66 US dollars. WTI reached the level of $61.10 per barrel and is likely to stay in the channel between 58 and 63 US dollars. Falling oil prices put pressure on the Russian assets, including the ruble. What's more, rising tensions between Russia and the US make the situation even more difficult for the ruble. For instance, Russian Foreign Minister Sergei Lavrov said that Russia was planning to gradually move away from the US dollar and Western-controlled international payment systems. Such statements weigh on the ruble and support the greenback. In the morning trade, the dollar-ruble pair was trading at 74.70. The expected trading range for the pair is found at 73.50 and 75.50. Likewise, the ruble is weakening against the European currency. The euro is strengthening following the rise in the US dollar. Today, the euro-ruble pair has reached the mark of 88.80. The range of 88 to 89.90 will remain relevant in the near term. Global trading floors also show mixed dynamics. In China, the stock market is trading firmly higher, with its major indices gaining 0.7%. Meanwhile, in Japan, markets slipped by 1.8%. There is a lot of turbulence in Europe at this time. A region is on the verge of facing another wave of coronavirus. The pace of vaccination and the spread of new coronavirus strains will determine further development of the situation. Recently, France and Italy have been showing the highest infection rates in Europe, with 20,000 new cases reported daily. The same is true about Turkey and Poland. Russia, however, is not in the list, as it reports only 9,000 cases per day. Meanwhile, the infection rate is declining in the UK, just like in the US, where over 30% of the population has already been vaccinated. However, the employment rate in the US has suddenly decreased in recent weeks, while the number of unemployed reached 4.1 million people. This indicates that the effectiveness of stimulus measures introduced by the US government and the Fed is low, while the risks of inflation and asset bubbles are still rising. Last week, Fitch rating agency released a forecast according to which the Fed will have to raise interest rates as soon as the beginning of 2022. The market is anticipating important news that is due to be published this week. On Wednesday, the US will release the data on durable goods orders. On Friday, the report on inflation and household income and spending is expected. This may add optimism to the market and set the upside direction. That's all for now. Thank you for watching and stay tuned.